Sandip Sabharwal joins us. Sandip, good morning. Thank you for joining us. There was a fear, there was anxiety, there was curiosity in the market yesterday that what essentially will come out from Prime Minister Modi's visit. So far, so good. Can I say that?
I think nothing is happening now. Everything has been pushed back to April. So to that extent, there is nothing adverse per se for any of the export sectors at this stage. And we've also seen that due to various comments on resolving the Russia-Ukraine issue, we've seen that global risk premium seems to be ebbing, which is reflected in the sharp correction in the US dollar index, which overall will be bullish for emerging markets. So right now, we've seen a huge outflow of money from all emerging markets, including India, over the last few months. We think that the FI selling is happening in India only. Actually, if you see figures across the board, you'll see that it's happening across emerging markets. The significant outperformance which has started in Chinese equities combined with the US dollar moderation will reverse quite a bit of flows into emerging markets. That's my view right now. It when it happens, it might not happen today. Whether it happens next week or next week next to that, timing is uncertain, but the stage is set for that to happen.
Again, you are saying that dollar has stopped appreciating, which is evident. 107 to 109 is where the dollar currently is moving. Money is moving back to China, Sandeep, which started happening a couple of months ago. But what matters to our viewer is that even if emerging market flows they reverse, if nothing comes to India, then that's even a not a great place, not a great situation, Sandeep.
So typically, Nikunj, if you evaluate flows, India-specific fund flows have been very muted across the last few years, both in terms of inflows as well as outflows. The flows are more into emerging market funds, where India today has a dominant market share in most of the indices which track the emerging markets. So that's why we have also been bearing the brunt of the outflows when ETF outflows happen. So when people start to chase performance, which they will be forced to chase, in my view, at least because of what's happening in China, we'll see flows. China might get greater flows on China specific funds. Uh, Obviously, because money always chases performance. But the entire emerging market basket, where China is a significant proportion, and we've seen other emerging markets also bounce back, not as much as China. We'll see there's a potential of an entire reversal of flows, not to that extent like the outflows over the last 2 3 years have been humongous, but we will see this kind of severe selling stop, and we will see at least moderate inflows start. And if the performance sustains, maybe it will pick up. So that's my thesis as per the analysis of whatever is happening globally. Now, the key is for that to happen. So that we'll get to know in a couple of weeks.
All right. Hi, Sandeep. Good morning. But one of the key sectors that going to be in focus is the defense pack, because the key commentary coming in where they say that the US will increase military sales, including the sale of F-35 fighter jets, and the collaboration is expected to increase over time. But given the fact that there was a lot of push with the Make in India theme, and we have been seeing all these Indian defense companies performing well, what's your take on the defense pack? Do you believe that the winter time will be an elongated one for the Indian defense companies, is what we have been witnessing? Or rather, the opportunity size of the growth is way more and investors can actually start looking at these names?
So any imports of defense equipment from USA, I think will be very high tech equipment where India either does not manufacture or neither has the capability to manufacture in the near term. So in any case, these Indian defense companies are not going to manufacture those things. The second part is how do those purchases get structured? Because from many countries, India has pushed for first fully imported products and then some manufacturing in India in collaboration with some PSU defense company or some other company. So how does that structuring happen for the imports of high-tech defense equipment, including aircraft from US, is something we need to see. Whether there'll be some manufacturing in India or they'll be fully built, which will be imported. I think that will determine some of these things. But overall, from whatever the growth prospects of the Indian defense companies, I think they should remain the same. Now, whether you buy the stock or not will depend on the valuation of the company at that point of time and the growth prospects.
Chandan, let's have your take on this one. What's your view coming in on Nazara Tech?
Good morning. Thanks for having me. So looking at the Nazara, the stock has been consolidating in a range from last almost 6-7 months. In the last month, we have seen a corrective move from 1080 to 875 kind of level. So it has been moving in a range and now near to the lower band of the trading territory. And the good part is that even after the market corrective move, the stock has not seen much selling pressure comparatively. So I believe support-based buying could emerge. And from last 25 days, 3 to 4 times, it managed to hold support near 900, 885 levels. So I believe with support of 885, one can utilize any small decline to buy for an upside target towards 980 to 1010 levels.
All right, that's the take on Nazara Tech. But Sandeep, what do you make out of these United Breweries numbers? Did you happen to look at those? Because it's been a miss on the frontline numbers. The volume growth has been decent, but the company is talking about increasing their penetration in the premium category, and they've also put up a plant. Your take on United Breweries or any other stock from the same sector that you like at this point?
As far as beer goes, I think United Breweries is the only key company which is listed. Then others are more on the alcohol side. So result, because this is relatively a smaller quarter for beer company because summer demand for beer is much more. But there was news flow on some price increase they have got from Telangana, and they also announced a new plant after several years. That indicates they are bullish on long-term prospects. However, valuations are not cheap, so I think valuations are pretty steep for UB. So I think that's the thing which has to be taken into mind.
So valuation reset is much needed for UBL. That's the take.
Sandeep, let me come to you. There was a news yesterday, the ETINA broke that sources have told ETINA the Swiggy has actually written to select partners in order to levy 2% collection fee. Also, they had written to this on to the partners on February 11th. Post that, you saw a spike come in on Swiggy stock price as well. But I wanted to understand your take. How should one actually look at these players, these quick commerce players, as well as food delivery partners, given the fact that there is rising competition, and we've seen that impact on Swiggy's earnings as well as Zomato's?
The problem with Swiggy and Zomato is not the food delivery business. I think their problem is their quick commerce business, where they are burning huge amount of money, where competitive intensity is very high. Unlike in the food delivery business, where the duopoly is actually very strong, Swiggy and Zomato. And on quick commerce is the unfortunate part is they are putting more resources towards quick commerce, growing quick commerce, where they are burning more and more money. Amazon is now making a huge entry into quick commerce across larger cities and then move to other cities. I think it's going to be tough because of that, not because of food delivery. So I think next couple of quarters or even longer could be tough for shareholders of Zomato and Swiggy.
All right, that's the day coming in on Swiggy, but some of the other earnings candidate as well. Today, of course, we will have our eyes on Hindalco as well. The numbers were largely in line. The higher aluminium prices did aid the revenue growth, but we already have the numbers coming in from Novelis as well as the management commentary. But given the earnings and the stock is sustaining above that 600 level, Naresh, what's your take coming in on Hindalco?
So technically, the stock looks decent in the near term. We've made, say, roughly two bottoms around the 560, 570 mark, and the interim highs are around 630 in this move. And if that crosses, that becomes a trend change. For now, for the last 4-5 sessions, also consolidating in a tight range of 590 to 605. So would expect a move towards 630 in the short term and then review. If it sustains 630, then we get into a trend reversal.
But Sandip, what's your take on ITC Hotels, one of the recently listed candidates? Given the valuation, a lot of these analysts are also finding it attractive at this point in time. But what's your take on this one?
Actually, I haven't looked at detail in terms of valuations of ITC hotels, but the overall hotels business in India continues to be in a sweet spot with most companies doing well. And ITC hotels, as such, as a focused entity, demerged from ITC, actually should do better than what it was doing earlier. But I can't make comment right now because I haven't studied in detail as to what we should be doing at this price.
Just scanning through lots and lots of stocks here, and Sandeep, suddenly I can see Chandan is still there. Chandan, I'm just coming to you, but I have a question for Sandeep here. Sandeep, in this decline, cement has fallen the least. Is there merit in thinking that this is one sector where there would be no tariff issue because cement is a local commodity? If economic recovery kicks in, cement would benefit, and these stocks have done nothing, Sandeep, in the last 2-3 years.
Yeah, so I think there are many industries in India which will not be impacted by tariffs at all, which include consumer products, which includes construction, infrastructure companies, etc. So I think India is largely a domestic economy, except for 2-3 sectors which get more impacted. Secondly, I think on the cement front, the resilience of most cement companies is actually somewhat intriguing given the significant oversupply situation which exists in the cement industry. However, they have gained a lot from cutting costs, moving to solar for their power, and overall efficiency gains. So I think that's helped many companies sustain profitability. So I think demand should pick up going forward. So that's fine. But the valuations are not cheap of this sector.
Okay. Chandan, cement, is there merit in thinking that something exciting could happen there?
Yeah, it seems actually a couple of cement stocks are holding well and they are resilient at the time of market decline. Most of the 70-80% stocks are down in this market scenario, but selective cements are really doing well, which clearly indicates strength, and small follow could cheer to the next leg of rally. So here I want to mention about Ultratech Cement. The stock is holding well from last 7 to 8 months. Multiple time it has taken supported 10,500 zone, and most of the time it goes towards 12,000. And I believe this time if it manages to move beyond 12,000, then fresh leg of rally cannot be ruled out. But as of now, looking at the recent price structure, we are suggesting to buy with support of 11,300, and it can head towards 12,100 and higher than that. Second cement name will be JK Cement, holding well, making higher top, higher bottom on monthly time frame, holding to rising support trend line. So I believe JK Cement also can do well with support of 4,700. It can head towards 5,000 marks. So Ultratech and JK Cement are resilient. Comparatively, strengths are visible. So momentum could be there with a small follow-up activity in these counter.
So Sandeep, what's been on your shopping list? I mean, fear is when you buy, and there is a lot of fear on the street, my friend. How are you using this sale to your advantage?
I think a large number of companies have corrected across the board. So, which includes, so I think some of the companies on the construction infra space where there's been a significant downgrading of execution, etc. Those are in value zone because execution should pick up, and margins should improve for them next year. There were a lot of expectations, but then suddenly there was a slowdown, and most of the people were unprepared for that. So I think stocks like NCC, Ahluwalia contracts, I think at these prices they have value. Similarly on the transmission equipment side, where actually there's a lot of momentum and no negativity, but stocks have fallen sharply. So there are stocks like KEC International, Kalpataru Power, etc., which look fine. On the large cap side, Bharti continues to do well. So I think that still has legs. On the auto side, I think Bajaj Auto, M&M, Maruti all look good. So I think some of the names which are coming to mind right now.
You still have your old favorites, L&T, Wonderla, or you've decided to par your positions there?
No, L&T is there. So Wonderla also we have actually added because there's been a sharp correction because the company did not do well this year. But they have a decent pipeline and they are the only credible players in the amusement park business. So I think eventually they'll come back. So I think this also looks fine to me at these prices.
Okay. Chandan, can you hear me?
Yeah, I can hear you.
What would be a good stock which you would say that I'm buying it today, but I will not sell it? Chandan is gone. Bit of Harry Potter there. Doesn't matter. He'll come back. Is Chandan back? Can I go to him? See, that's the reason why I asked him that. Can you hear me? I saw this was coming. 67. Okay, he's back now. Okay, Chandan, which is one stock you would say could be part of my long-term wealth creation portfolio? Because technically also sometimes, there are some trends which Nuresh has, occasionally identified where you buy today based on technicals, but you hold it for next 5 years. Anything which you can find in this market rubble where you think that the chart patterns are looking strong for a trend move?
Yeah, so I'll be with selective heavyweights rather than talking about the mid cap, small cap, given the market scenario. I can name a couple of stocks which can do well for short term, long term to 5 to 10 years point of view. So Bajaj Finance will be the first name comparatively holding the strength and has potential to see the next leg of rally given the major consolidation breakout on the daily, weekly, and monthly chart. Kotak Bank could be the next name. Comparatively, it has the low beta, but a long monthly or yearly breakout opens the fresh leg of rally, which can lead the counter to move towards 15 to 25%. Bharti Airtel could be the best telecom name in the portfolio. Apart from that, I believe selective chemical name are in focus, whether we talk about SRF or UPL. So these are the 4 names which we can pick, and I think if we have to focus on the consumption with financial, and I think Bajaj Finance could be the one name if you want to ask me to select one out of 4. So these are the 4 to 5 idea I think one should hold for short, medium, and long term point of view.
All right, so that's the take coming in from Chandan, but let's